2, 1. Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as usual. And today we're going to dive into this more crypto related fallout. Silvergate, which is a big bank that services all these crypto exchanges and lending services, is in trouble. We're going to talk about that. And basically, you don't want to be exposed to this. So let's dive into this video and check it out.
Trade Genius.
Bob, so this is going to be like more fallout from FTX. So if you guys aren't familiar, Silvergate is integral to the crypto ecosystem at the moment. It's a small bank in California. They pivoted to servicing like crypto exchanges because some of the exchanges were running into interference with some of the legacy banking systems. This goes back a couple years, so things are a little different in that regard now. But this is how they really pivoted and really got a lot of exposure and rode this recent crypto wave up, and they went from like an IPO of like $10 and change and like skyrocketed up to what, like over $200, I think, Bob. I can't remember, but
yep.
Yeah. So yeah. So but essentially what they ended up doing was creating what they call the Silvergate exchange network. So this is kind of like if you had like a Fed wire system for crypto specific companies. So it's become like really integral. Now, the problem with that is if they're in trouble, and we're going to discuss why that might be, this could have greater consequences for the ecosystem. So, Bob, I know you had done some work too on this, and I think you had dug up like this financial statement. Talk us through these points here on the exposure that Silvergate has.
Yeah, so the thing with Silvergate is that, they've been trying to distance themselves from the problem, and some of these are a little small for me to see, but I gave you 3 documents. One of them talks about FTX being exposed, Silvergate being exposed to FTX in terms of lent money to FTX or put money on deposit at FTX, and they're in big trouble. And so that money's gone, okay? Or it's going to be in the courts forever if they can ever track down all of the 60 or 70 different places that Sam Friedman and company spread, and God knows where all that money is gone. It's probably to the wind right now. But that's the number one thing. The other thing is that people, when they think of a bank, they think of, a broad base of depositors and good collateral and stuff like that. But Silvergate has very, very small amount of customers, and most of them are exchanges. And the thing is about exchanges is that they're all rolling up right now. We don't know who's exposed to whom in this whole environment in the crypto space. And they may not be exposed in the sense that are they counterparty risk to these people? But that's not as important as the point is that if this whole set of enthusiasm for crypto and crypto trading or crypto money movement starts to falter, well, that's their business. That's how they make their money, Phil. They make their money on the spreads, they make money on the trade, they make money on fees, and it just puts them at risk. I was shocked how many investors they have that are part of like 11, and the rest are exchanges, and I think it's huge. And I think the last one here, I'm trying to read it. Is that the financial statement?
Well, this here is showing their exposure to BlockFi.
Yeah, BlockFi. That's the other one. So they're exposed to BlockFi on top of FTX. So, and now they're an unsecured creditor to BlockFi. So, and then BlockFi, I think they filed today for bankruptcy, if not
correct,
if not mistaken. And so basically, they're losing their customers. They're scaring everybody and their bejesus out of doing these trades, and the customers they have left, they may be exposed.
Yep.
So I think their whole business model is in trouble, and they got a guy that came in there to shore up their bank, but I think he's just trying to whistle past the graveyard at this point, and trying to give them some runway. But I personally don't think they're going to make it. But even if they make it, Phil, it's a tremendous opportunity for us because We went short Silvergate Bank, and you see that big old circle down there. That big old circle down there is our target, and that target's an easy one for us because that's where it IPO'd out. And it looks like everybody who's ever invested in Silvergate, if they didn't get in on that very first day or pre-IPO, they're losing money. And people are just going to be bailing out of this thing and being done with it. I think it's going to go lower than $10, but we got in it we bought puts, strike 23 puts on it, out into the end of December and then into January, and when it was higher, when it was at $28, $29, and today people are starting to sniff out the fact that, hey, their business, their financials are at risk now because of who they got in bed with that are going bankrupt. So we think this is going to drop at least 50 or 60% from here. And if I have to push out from January into like March, I will. But I think Silvergate's in big trouble, Phil.
Yeah, I do too, and I think that most definitely is probably going to complete the Eiffel Tower, the 2-year Eiffel Tower, and get back to those levels, and maybe even it may not even survive this. That's how serious it is. So, like Bob said, it's in a downtrend, obviously, and we don't like shorting the absolute whole, because sometimes what'll happen is they'll come and try to ram the stops and jam it up. But any pops on this is definitely probably going to be an opportunity for puts.
And they did it last week. They tried to jam everybody out low volume Thanksgiving week. I just ignored it and ate my turkey because I knew right away next week when some of this more exposure comes out, it's just going to keep dropping, and people are going to lose hope on this stuff. But I want to make my daily, whenever we talk about crypto madness, my exhortation to everybody here. Remember, Bitcoin's not crypto, okay? In the sense that don't conflate the two, and because at the end of the day, there's going to be projects that are going to be worth owning, and there's going to be Bitcoin. So I just want to be really clear with that. We've been dooming this now for a couple of weeks, but it's important. Really, we're dooming it for education, just to educate you. We're getting educated at the same time. It's so opaque that I think a lot of that stuff has to come out, Phil. And but at the end of the day, we're going to have a stronger product on what I would call the non-bank side of financial transactions, because that is a service that is absolutely essential. It's the reason why Silvergate got in business, why XRP got in business. That's why the feds want to do their CBDC, basically, the Antichrist move. And now you're also seeing exchanges starting to come up around the crypto space with some of the big banks in the U.S. They know this is necessary. We can't operate on a 9 to 5 banker schedule, Monday through Saturday morning, right? And funds need to be moving at 24/7 pace and at low cost. Every time I do a wire transfer, it costs me $30. It's absolutely ridiculous, and I think that service is needed. And plus, look, we know now with the way in which these elites like to have choke points to be able to keep you in line, is that we need something that's frictionless. Right. So at the end of the day, there will be a frictionless way in which you can move money outside the banking system. And that's going to be the big civil war. This is just one of the skirmishes that now has to get fought and fought over. So maybe some of the adults can come in here and with a little bit more transparency, that people can trust the system and trust when they put the money in, it's not going into Sam Friedman's pocket on its way to Ukraine back to the Democrat National Committee. So this is fun stuff, Phil. We're on the right side of this, and you've been calling this for a long time. With the alts going into their winter, and when things are in a downtrend, guys, that's not when you put big bets on. And some of these guys like Pomp, now they're gonna have to eat some humble pie here, and maybe we get some of this goofy ass meme stuff out of crypto, and so serious people can use it for serious business. So that's what I want to talk about. But Phil, before I give you another word on this, is that I also want to talk about another bank that's failing, that's even bigger implications.
Yeah, here's the Credit Suisse symbol
Credit
CS.
Suisse Bank. So, and Pike, I could have probably thrown Deutsche up there too. This is a criminal enterprise masquerading as a bank. Okay. These are the people that gave us the XIV debacle. In 2008, they had other debacles. They have very, very, what I would call loose, um, you know, uh, money laundering, know your customer, those kind of standards, because they have the standards there. But this was used for funding operations on a geopolitical basis, and now they're in big trouble. And people are moving their money out of these guys. They're moving money out of Deutsche Bank, and these have implications. These are European banks, and I think when they go, Phil, this is going to make Silvergate and FTX look like chump change.
Oh yeah, I
Okay,
agree.
and so the laughing and the Schadenfreude of the crypto boys getting their heads handed to them is gonna stop when these guys find out just how much dark money was laying out there and counterparty risks that are uncovered or have inflated collateral. When the balloon goes out. So I want to assure people that look, these banks are in trouble. That's why we got to be really, really careful right now. We just don't know when we're tipping through the tulips here if we're walking into an old World War II minefield, because one of these things are going to set off, and the crypto thing might be the thing that sets it off, Phil. We
Yeah,
don't know. We
right.
keep pulling on these threads.
Yep.
We don't know what thread's going to hit in real life,
Yep.
right?
Yep, because we talked about that on the last video. Is you don't know the ramifications into the legacy markets, and it's pretty. I think it's going to be inevitable that somebody's like in the legacy market. Like when I say that traditional banking, it has some tie to like Silvergate. That's how it starts. One guy is exposed to something that nobody knew about, and usually these dominoes fall where you least expect it, or at least trigger from something that you're not expecting. And so, yeah, I think there's a significant risk for that. And as you know, and people in our VIP room know, that the technicals are looking a little toppy. So this could all be coming back down from this bear market rally we've had rather quickly. So you definitely got to be on your toes here.
Yeah, absolutely. And look, if you guys want to trade with us, you're seeing a lot of dots and triangles and lines, and all these things have a purpose. And all these things have alerts to them, and this is how we trade. And we'll teach you how to use these indicators and algorithms to trade. And also, we throw trades out there every day. So, you have a couple days left of our Black Friday special, and I don't know, Phil. I was pretty overwhelmed with the number of renewals and new people that joined us. I think people are hungry for a methodology that works. No guru base. No Lambo trading. It's all structured. It's all math, and but easy to understand. And
Yep.
if you guys want to trade with us. You won't get these prices after they go away on Thursday. They're gone for a year. We put them back in the chest, and you're gonna have to pay normal rates. And you might as well steal from me here by Thursday, because next week we go back to primetime pricing.
Yeah, and we're going to touch on kind of the recession worries later in the week, but that's a definite thing too. And going into something like that, if we are going to see a recession within the next 10 months, you can learn out how to protect your portfolio, however you have it. Because even in a 401k, there's things that you can do that will prevent your 401k from being dragged down. A lot of people don't realize that, but you can shift your money into a dollar fund, basically, right? And not be exposed to the drawdown in equity. So there's a lot of different things you can do. You can ask questions in the room. And at the end of the day, you'll be on guard against what's going on in the markets, which is unfortunately probably more downside than upside over the next few months. So anyway.
Yeah, we don't care. Like Phil said,
Right.
there's opportunities both ways.
Right. Yep. That's the whole point. Being able to either profit or make money on the way down, or at least step to the sidelines to protect what capital that you've built up over the last couple of years in the run up. That's the whole point. And then being able to re-engage when the time is right, and then maximize. That's how you really outperform the markets, is getting back in on the lows and then riding it back up. And that's how you really outperform the market historically. And that's what we try to get everybody to do. And it's not that difficult. You just have to be disciplined about it.
Yeah, that's the trick.
All right, guys, that's going to do it for this episode. Thanks so much for watching. Please hit like and subscribe. It really helps us out. And we'll see you on the next one. Take care.
Trade Genius.